So it's mid-October in Silicon Valley and it's raining, and I am all for it, but it sure is strange. And speaking of strange things going on in Silicon Valley, I have to put this out there. What the hell is going on with the Silicon Valley real estate market right now? I mean, every coffee shop from Palo Alto to East San Jose has at least one realtor or mortgage broker whispering about inventory, mortgage rates, and whether the AI boom is about to buy up Los Altos Hills. Let's break it down because the numbers for September 2025 are actually kind of wild and in a totally Silicon Valley kind of way. First off, the median single family home price in Santa Clara County climbed back up to about $2 million. That's up roughly 3% year over year and up 4% from August. Yeah, we are still solidly in the $2 million is the new normal territory. That's right. 2 million bucks for a roof over your head and maybe a scraggly ass lemon tree in the backyard. Now, about competition. You'd think with the economy wobbling a bit that buyers would be timid, right? And you're right about that. Timid by Silicon Valley standards anyway. A culture which rewards risk takers. And that might explain why the sale to list price ratio actually ticked up to 103% for single family homes in Santa Clara County. In plain English, that means sellers are still getting slightly more than they're asking. Now, maybe not crazy 2022 bidding war money, but definitely enough to make you consider naming your firstborn child after your realtor. And if you are wondering why the name Sebastian has become so popular in Silicon Valley, well, now you know. But here's where it gets really interesting. Days on market for single family homes dropped to just 11 days on average in September. That's compared with 13 days on market a year ago. So homes are moving a little faster again this year. And by the way, for condos and townhomes, it's around 26 days, about double last year, but still not bad in the grand scheme of things. Inventory, which is the eternal Grinch of the Silicon Valley real estate market, has nudged up slightly. We're sitting around 1,081 single family homes on the market, yeah, give or take. Now that's more than last year, but still nowhere near enough to satisfy demand in a county with 1.9 million people and about 100 new AI startups every month. Now, if you're waiting for a flood of listings, don't hold your breath. This is Silicon Valley, it's not Miami. And hey, closed sales actually rose to about 700 sales in September of single family homes, up 9% year over year. Meanwhile, new single family home listings hit 908, slightly fewer than last year, which means buyers still have to fight over a limited pool of properties. Think like musical chairs, but each chair costs $2 million and comes with $22,000 a year in property tax. And get this, in some neighborhoods, the price gains were just bonkers. Like around Stanford, the median price shot up 35% year over year. Well, I guess being near the nation's #1 university still pays off, literally. Now, down in the sticks in Los Gatos and Monte Sereno, they each saw around a 13% increase in sale price, while Sunnyvale and Los Altos hovered in the mid single digits. The only real losers, Mountain View and Los Altos Hills, each saw median prices dip a bit from last year. Now, maybe everyone's decided to trade a view for a commute under 20 minutes. I guess so. But what really caught my eye this month was the number of price reductions across Santa Clara County. They're up about 25% year over year, and that tells me that a lot of sellers are still shooting for crazy 2022 unicorn pricing and getting a reality check from the market. So let's connect the dots. Prices are up slightly, competition remains stiff for those prime homes, days on market are down, and inventory is still pretty tight. In short, Silicon Valley real estate is basically doing what it always does, defying logic and gravity at the same time. You could drop interest rates or raise them a point, and the market would still find a way to argue both sides at the same time over a frosty glass of kombucha. Now, for a bit of mortgage context, as of early October, the average 30-year fixed rate was hovering around 6.5%, down somewhat from the sevens we saw in the summer, according to Freddie Mac anyway. Now, buyers are starting to creep back in, especially those tech workers whose stock options have bounced back thanks to that AI wave. You can actually feel the shift in the energy at open houses this fall. There's more traffic, more questions, and more people saying things like, how many disclosure packages have you had downloaded? And what is the seller's expectation for price? Those are two of my favorite questions, but they are questions which, by the way, I'll never answer, not even with my dying breath. Now, for those of you keeping score at home, and you know who you are, the months of inventory for single family homes sits at around 2 months, and for condos, it's closer to 2.5 months. That is still a seller's market by any definition, but definitely a healthier and perhaps more sustainable one than the pandemic frenzy when we were measuring inventory in days. It means buyers actually have a shot. Yeah, a small shot, but still a shot. So what does all this mean if you're a homeowner in Silicon Valley? Well, if you're thinking about selling, you still have leverage, especially if your home sits on prime dirt in a good school district and ideally walking distance to parks and other amenities. Now, if it shows well and if it is priced reasonably, you're gonna do great. Now, if you're a buyer, patience is starting to pay off. And remember, a lot of sellers are getting a little more flexible, as shown by that 25% increase in the number of price reductions. And here's a funny thing I've noticed after 22 plus years in this market. Every time people start talking about waiting for a crash, we get another mini rally instead. It's almost like the market can smell the fear and just laughs it off. So, to wrap it up, the headline for October 2025 is steady prices, shorter listing times, and a renewed sense of competition. So, if you're buying, get your financing tight and your timing right. If you're selling, don't overshoot on price unless you like watching your Zillow views go up while your offers stay at zero. And if you're just watching from the sidelines, grab some popcorn because the Silicon Valley market never stops putting on a show. Oh, hey, regardless of what the market is doing, if you've owned your home for 10, 20, 30 years or more, you're going to be making an absolute killing when you sell. And if you're worried about having a tough time in this market, especially if your home hasn't been remodeled since Tricky Dick was the lord of the realm, I can tell you, you don't have to sweat it. It's always the low-hanging fruit that pays the biggest rewards when it comes to prepping your home for sale. A little money will go a long way to making your home irresistible to buyers. That and the right pricing strategy. So if you are thinking about making a move and you want a realtor who's going to love your wood-paneled walls and avocado tile, I am your guy. Give me a call. My number is 408-596-1623. I'll help you get unstuck and moving on to your next chapter with the biggest bag of cash possible. Let's talk soon.